Good morning. Today is September 30th. We're into the fall in the good Northwest here, and we're going to be talking about lending some knowledge on what's going on in the mortgage market. So, the mortgage market's been a very volatile, very rough week. Um, the last 10 days has just been brutal. And it's one of those things where you just, maybe it's a knee jerk reaction, who knows? But really, it comes down to inflation, the lack of confidence that we have in this thing, and kind of, how they're going to right size it or fix it. So, GDP was actually down, which technically means recession. 2 quarters. It has every time since it's happened since like 1950, but they haven't actually said recession yet. Home prices, fell a little bit, which is happens, but they're still up year over year. No surprise there. Pending home sales are down. Purchase applications are also kind of flat, maybe down a little bit. But what you're seeing is just, anytime you have these just different shifts, you're going to see a little bit more of a pause in the marketplace. Again, buying a home, as you well are aware, is more of a long-term thing, not a short-term. What's it look like this week? So it's still a great opportunity to be a homeowner. It's just, last week versus this week is just not as good. So what that looks like is, what we do every time is we talk about, how it's impacted rates. So how it's impacted rates is rates have kind of continued to go up. That's what we've just seen. The same loan that I do every week, which is, $400,000 purchase, 20% down, great credit, all that kind of good stuff. Got a little worse. It's 2662. So it's kind of hard to believe that you buy a house for $400,000 down or put 20% down. Your payment is $2,600, but also rents are going up, so it's probably proportional. About a little over $110 difference in price this week versus last week. But that number is a little bit deceptive because being able to buy their interest rate down makes a lot of sense these days, and we'll kind of talk about that in a different slide. But your purchasing power, last week you buy a home for $420 for the same price for the same payment. This week it's $400, but you look back a year ago it was $600,000. So $600,000 house for the same payment as a $400,000 house. That's kind of a sticker shock. But it is what it is at this point. So buying down makes a lot of sense. Here's the graph that shows that you can get a 0.5% lower interest rate. It only costs about $2,400. You break even in 22 months. Everybody's going to be doing that. So, what I would say is rates are in the low sevens, not paying that much in points, and the high sixes, maybe paying a little bit in points. It's kind of up to what that borrower wants to do or how long they're going to keep the home to where that matters. And what that means is, we have a little bit of a bumpy ride in 2022. That's nothing new. So I think the song for this week is Elton John, "Candle in the Wind," and 1997 rates were at 7.25%. So very similar to what they are now. So people bought homes back in 1997. Home prices are a little bit lower, so that kind of doesn't go great with home affordability. But there's still plenty of opportunities out there. As always, you can reach out to myself or anyone on my team. We're here to help, and we appreciate it. But you can call anytime on the weekends. We're here to help and serve your customers. So I'll talk to you later. Thanks.